Hi everyone and good morning and welcome to today's morning report on Thursday the 29th of January with me, Rich Perry, market analyst at Handtech Markets. These European markets have started negatively and that's sort of been a function of what's happened on Wall Street last night. It wasn't really the FOMC that did the damage. It was more the fact that the oil price decline hit the majors, and certainly that is filtering through into the Asian session and also into Europe today. For example, on the FTSE 100, results from Shell have been disappointing, and the oil majors such as Shell, BP are sharply lower on the back of that, so that's certainly not helping. And the fact that the oil price is falling as well is now a problem once again on these markets. So the other major bit of news yesterday was obviously this FOMC statement that we saw yesterday evening, and the markets were fairly mixed to slightly dollar positive in their reaction. We had a slight alteration in the FOMC statement, and that came out as almost as a hawkish surprise, because they removed the term considerable time, and now the FOMC is now going to be patient with its rate hike potential. And also the FOMC is sees a positive a strong labour market, and also solid economic activity. So that is certainly a slightly hawkish shift in the language there from the Fed. No major movement though in the forex markets, and it is almost a surprise in that, because that is a fairly hawkish move on the FOMC, but still no real dollar strength on the back of it. And yesterday we saw a slight rebound in the dollar, but still we're fairly flat today in the open, and with no major move, no major breakouts amongst the likes of, say, dollar yen and also gold. Interestingly, both still consolidating. But the thing we did see yesterday was this large spike in volatility on the equities in the US. Now that has certainly come on the back of this situation with falling oil price. Oil price has been a big issue in recent months, and certainly has impacted on market sentiment, and that is certainly being reflected in this sharp rise in volatility, 19% higher on the VIX overnight, and that is again reflected in another decline on the S&P 500. So we are slightly down on these European markets today. Now, what are we looking out for this morning? Well, throughout the morning we've got German inflation. The regions announced their inflation in Germany. So let me rephrase that. The regions in Germany announced their inflation throughout the morning, and then you get the composite figure at 1:30 this afternoon. At 1 o'clock this afternoon, and the HICP is expected to fall from 0.1% to negative 0.2%. So that would be Germany going into deflation, interestingly there. Also, we've got the weekly jobless claims, as ever, on a Thursday. And that is expected to come in slightly lower at 300,000. But it's interesting that we've sort of now settled into a fairly sideways move in these jobless numbers, and they're no longer really in this decline that we had seen through 2014. It sort of is more around this 300 level quite consistently now. And also this afternoon we've got pending home sales as well for the States coming in, expectations at 0.6% growth in the pending home sales. So that takes me to my chart today, which is the DAX. And the DAX, this is on the hourly chart. Interesting, I've drawn in this potential neckline of a top pattern, because it could be that we're beginning to come back towards a potential correction. Now I'll show you on the daily chart, because we've got here this consolidation over the last few days, as I've shown you on the hourly chart, but you've had the RSI, which has started to fall away, and actually theoretically now giving you an RSI sell signal, which is across back from being above 70 across below 70 is the most basic form of the RSI sell signal. This is coming alongside the fact that we've got now falling stochastics, not a confirmation sell signal yet. That needs to be a fall below 80 on the stochastics, but still, look at the last time we had these moves. We had one in November when the stochastics started falling, and you had the crossover which sort of heralded a bit of just a general consolidation on the DAX. But the last one, just prior to this one, is this one in December, where we did have this confirmation sell, and then a sharp fall back in the DAX. So it's interesting that we're getting this move at the moment. Whether this stochastics correction continues or not remains to be seen, but it's certainly something that we need to keep an eye on. Now, where would we be coming back to? Well, we've got several indicators that we can look at here. This is the bull run here on the DAX, and what I'll do now is just draw in a quick Fibonacci retracement. It's a bit rough, so just excuse me on that regard, but still interesting that we've seen that we've got this move here. 38.2% here is this consolidation zone from just a few from the middle of last week, actually, around 10,300. Now 10,300 would be the downside projection target of this top pattern should it complete. So there's a couple of reasons why. If we do get this pattern completing below that support at 10,553, then we could see a further correction back towards that 10,300 and on the fib level 10,260, 2,000. Depending on obviously how accurate you draw the lines. This is fairly rough because it's not snapped to the lows and the highs, but still, I think you get the idea that we could be open for a bit of a consolidation. The other thing also, the other thing also is watch out for the RSI on the hourly chart. This is RSI which consistently finds support in the mid 40s, and if that starts to break down, if that relationship starts to break down, then we could see again a bit of a signal that it's time to take some profits on this DAX. Also, the MACD line's still above neutral, but beginning to fall back and could well turn negative soon. So a couple of reasons why that we could be looking out for a bit of a correction here on the DAX. Now, to abort this corrective move at the moment, or potential corrective move, you'd need a rally above this rally high at 10,728, 729, which would take out these two highs here over the last couple of days. So that would then sort of reopen the highs once again. But certainly at the moment, DAX is just looking like it could be forming a bit of a top pattern, and we need to be ready for that if it does happen. So I wish you good luck in your trading on the DAX today, and I will speak to you later. Thank you.